At Paul TVKE across all your social media platforms. 20146 is your SMS line. This is your official sector trends. Now, the Organization for Economic Cooperation and Development, OECD, in 2017 estimated that the assets in retirement benefit schemes totaled 50.7% of GDP in OECD countries and 19.7% of the total GDP in the non-OECD jurisdictions. From that report, they pointed to how most non-OECD countries still had a long way to go in the performance of the sector. A site on investments analysis of the industry in Kenya indicated that the retirement benefit assets as a percentage of GDP stood at 13.4% compared to more developed markets like the USA at 84.1% and the UK at 105.3%. There has been an exponential growth in the industry in terms of member contribution and performance, which saw it jump to 1.6 billion in 2018 from 287.7 billion 10 years ago, representing an annual growth rate of 14.3% over the 10 years, with the year ended June in the country seeing pension funds jump to 1.3 trillion shillings in June. Joining us this morning to put the pension the country is joined by Octagon Group CEO Fred Waswa. Mr. Waswa, good morning.
Good morning to you.
Happy to have you around. Let's get into the conversation this morning. Therefore, Mr. Waswa, somebody would ask you what has been behind this evolution industry that we're talking about in the industry that since its jump as per the latest figures that we've quoted for you this morning.
Good. Thank you very much for this opportunity. I think one of the main reasons why that has caused this high jump in terms of growth of the industry over the last 10 years, basically about 10 to 15 years, is the regulations that came in place in the year 2001. Previously, before 2001, we really didn't have a regulated environment. Apart from the Income Tax Act that will regulate the pension schemes. But when the Retirement Benefits Act came in place and put regulations to make sure that there is segregation of service providers, security of funds, that members can access benefits without the employer interfering with it, that has helped the industry to have people to have confidence in the industry. So you find more employees are agitating for establishment of pension schemes for their saving for retirement. So that's one of the reasons that has actually moved this there. The second reason is ideally we are moving towards a middle income economy, and what it means is that more people are getting into employment, and more people are getting some disposable income in their pockets. They are looking for ways of where do they save this money, and one of the avenues for saving for this money is in pension funds. Yes, yeah.
All right, let's move on to the next part of the conversation this morning. I mean, if you look at corporate and personal pension plans, they have been traditionally the strongest quarters in the pensioner industry. Is this going to change, or are we going to talk about them again being the biggest contributors to the industry, sir?
Of course, there has been quite some growth in the industry, as I've mentioned before.
Yes.
But we are looking at a much more bigger growth going forward. In fact, we expect in the next 5 to 7 years, these funds should be hitting 5 trillion in assets in Kenya, especially. Of course, there's also going to be quite some activity around Uganda because of the oil industry, so there are more people getting employed. So the idea is that in the next coming 5 to 7 years, we expect a much more bigger jump. We are going to get more people getting into employment. Over the last one year, because of COVID, there's been sort of a pullback in terms of growth of the economy. But just as when people are held back and they are left, they want to jump. That kind of activity is going to take place in the economy. What does that mean is that it affects also pension funds in terms of growth, in terms of income, and also growth in terms of members getting into the loop of saving for retirement.
Are we talking about an exponential rise in the importance, or I would say the civic education, as why people don't actually contribute to these pension funds? Because when you look at developed nations like the USA, where 84% of the GDP is an equivalent of their pension industry, are we going to get there, or we are way, way far back?
We are way far back, which is the truth. But I think we are on the way to that very particular destination.
Yes.
Because one of the things you need to understand is that if you compare Africa and the developed countries, we have an average age, or population age in terms of 20 years. The developed countries is double, it's 40 years. What it means is that they have more aging population. We have a younger population. We have 75% of our people are below the age of about 28, 29.
Yes.
And if you bring it down, 63% are below the age of 22. What does that tell you? Is that we're going to get more people getting into employment. We're just getting our younger people getting into employment. So which means that we're going to have more savings into retirement benefits in the industry, in this very particular perspective, yes.
Mr. Waswa, would it be wrong for somebody to interpret it the other round? In the sense that, well, we will have a more younger population, then it's actually easier for them to start saving early into their pension schemes, but they are not doing that, and probably they might not even get to do that if you go by the unemployment rates that are in Africa as well.
That's a correct interpretation. One of the challenges we have in Africa is about employment. Is the opportunities for people to go to work. There are many people, but there's no work to be done. But we are seeing economies growing. We are seeing, Africa is becoming the destination for investment.
Yes.
The returns in Europe, returns in America have started coming down. And Africa is the place to put their money. So we are seeing more PE firms, we're seeing more private equity firms coming into Africa, we're seeing more money coming into Africa. What does that mean? Is that today we may not have employment opportunities, but we are going to have those employment opportunities going forward. Now, the other thing that you have mentioned is about education. Education in terms of financial literacy. That is a bigger problem that we have as Africa.
Yes.
Is that most countries don't really place importance on financial literacy. Now, we need that to happen. And we believe that financial literacy is supposed to start from age 7. People to start knowing, how do you deal with money? Money is not eating everything. You save to be able to get the next money the next day. So this is an education that is supposed to be put into our curriculums, which to help people understand savings and the benefits of savings in that very particular respect. Yes.
Let's talk about what is happening here locally, even as we talk about the chances of us seeing these pension funds keep on increasing within the economy. Good news that if we go back to where we ended the year at 1.3 trillion shillings as of June 2020, good. But then, Mr. Wans, I want us to look at another part as well, the tax environment in the country. That even this young population that is getting into employment, if you look at where payee stands and the other taxes within the economy, they are on a high. In fact, our economy, and I would say Africa has been blamed for having one of the most punishable tax regimes within it. Do you think that this is one of those areas that we have to correct? If indeed we have to put money in the pockets of these guys that we expect to contribute to these schemes?
Absolutely, absolutely. One of the incentives for saving for retirement, especially for the younger people, as you said, you need to save slowly by slowly from an early age to be able to grow a bigger fund.
Yes.
One of the incentives is tax incentives. Now, we have had tax incentives given to this industry over the last over years, but that stopped almost about 15 years ago when the last incentive was ever given. Today, if you save an amount of 20,000 Kenya shillings in terms of value, 20,000 Kenya shillings, if anything above that, it comes from tax to pay. And we are asking government, if you need to solve the problem of old age poverty, which is coming, we must help people. We must encourage people to save today. How do you encourage them? That when you save in a retirement benefit scheme, you don't pay your tax on your money. So we need to increase the tax bracket that is provided for tax incentive into the retirement benefits industry. Today, you can only have 20,000. We need that 20,000 opened up to be a percentage of salary, so that a percentage of salary paid into the retirement benefit scheme is tax-free, rather than an amount which is fixed, and yet inflation is growing, salaries are growing. So you find people saving much, much less money into retirement benefit schemes. So tax incentive is a critical incentive that we need the government to be able to bring in the loop for many more savers, yes.
We look at the statistic that we're talking about in Africa as well, especially East Africa as well. I mean, the informal sector contributes majority of the employment, and so if we're talking about propping the pensioner industry, then it has to come from the informal sector. But Mr. Waswa, but even when we look at even areas like insurance penetration has been on the low. It's as if we have failed to unlock the potential of the informal sector into areas like insurance and pension as well. What is going to be the magic bullet, even as we talk about this morning?
I think the magic bullet for the informal sector is ideally the platforms, the products that are brought that the informal sector can easily save as little as possible. For example, we have a platform called Mobicasa, yes, which members can sign online and can save online and can be able to access their benefits online. So you make it easy for them to be able to save, even when they're in Kikomba or when they are in Kibera, wherever it is that they are doing their small businesses, they can be able to save. Now, those platforms are the critical bit for us to be able to help people in saving, especially for informal sector. Now, when you look at the informal sector, I always break it down into the informal and near informal. The near informal are those small, medium enterprises that employ 5 to 10 to 20 people. They are absolutely very many of them. The SMEs is quite a number of them. We have umbrella pension schemes, like the Octagon umbrella pension scheme, which basically helps them to be able to save for retirement. So you don't have to set up a whole pension scheme. You simply get your employees, join an existing scheme, and they are able to have an opportunity to save for retirement. So there are opportunities for people to save. What they need to do is to get a saving culture. A saving culture. You don't have to save a lot of money. You only need to save 20, 30, 50 shillings per day, and you'll be able to raise money for your retirement at the time when you retire.
All right, Mr. Waswa, as we clear this conversation this morning, I'm going to ask you to summarize where we are as a region in terms of security harmonization and what stands as an impediment to achieving this as a whole unit. And what is the outlook of the pension industry in the region amid the COVID-19 pandemic, sir?
In terms of the harmonization, the retirement benefits industry across the region, the quite a number of impediments. I think the Kenyan and Ugandan industry, the environment has come nearer closer. It's because the regulations in Kenya and the regulations in Uganda are absolutely similar. And the rollout is basically coming similar. It's very easy to harmonize that. The challenge is in Tanzania, where we have challenges in terms of opening up the industry, especially the financial industry, for liberalizing that, so that we don't have just 4 or 3 large pension schemes in Tanzania driving the industry, and which are government pension schemes. We need that to be able to be sorted out. We need to be able to have contributions to state schemes, harmonized, so that the state scheme contribution in Kenya, in Uganda, and Tanzania are much more similar. So corporates that are operating in these countries can then be able to set up private schemes for their employees, which are better managed, which have better growth. Because if you look at Uganda is almost about $2.1 billion in terms of pension funds. But 86% of it is in NSSF. In Kenya, we have almost $13 billion US dollars. This about 75% is in private sector. So you can see, if we allowed private sector to be able to flourish in retirement benefit schemes, then we will allow more members to save and feeling safe for their funds. So this is what needs to happen going forward. In the industry, in the region, I think we are looking forward for a major growth of retirement benefit schemes, especially in Kenya and Uganda, and also Rwanda, because of the regulations that have been put in place. But secondly, we are looking forward to this because of the economy. We expect the economy to be able to pick up, which means that more investment income that is going to come through for the pension funds are over and above the contributions that will be coming through. So we are optimistic that the industry is going to pick up and grow after the COVID-19 issues. Yes.
Pretty much, Mr. Fred Waswa, Group CEO, Octagon Africa, thank you very much for taking your time this morning to speak to Metropole Television. You've been quite invaluable, sir.
Thank you very much. Thank you very much.
On that note, we take a short break here on Business, and once we come back, more business.